Hello and welcome to the second subsection of the second section, which is supply and demand zones. In this video, we are going to be looking at what constitutes a supply and demand zone, what makes its validity, and looking at it in a general chart setting to understand which areas we consider to be important in our minds. Now, remember that when a supply and demand zone forms, okay, it is literally the definition as being the last down candle before an up candle, ultimately, or the last down candle, the last up candle before a down candle, or the last down candle before an up candle, okay? And that constitutes a valid supply or demand zone. And if price mitigates that supply or demand zone, then that supply or demand zone has basically had the positions within it mitigated, so does not need to be constituted as a valid zone anymore. And again, this in combination with all the other things that we are going to learn are going to be things that are going to be important. However, alone, supply and demand is not just enough, okay? And what I mean by that is if we just take a look at this, so in the last one, we didn't look at some of the ones that worked out. But again, if we look at this last up candle before the down move, so again, we don't have to be looking at the huge candles that took out liquidity, right? You have to realize that supply and demand zones have taken out liquidity on lower time frames. So even in this case right here, this up move before this real down move has taken out the liquidity above this. But the reality is all you need is an up move before a down move that has not been mitigated. So in the future, we're going to talk about what this area right here constitutes, which is, of course, an imbalance, thereby being an inefficiency where price wants to fill back in. But the reality is it's just a supply zone that has not been mitigated yet. And that's why you can see when price gets there, it mitigates that zone and begins to fall off. Similarly, right here, you have the last up move before the down move. Again, recognizing that if you highlight it, you need to take into account the actual wick as well if it's higher than the actual candle. So we have to take into account this, and that's your entire supply zone. And you can see prices came right back into it and traded away from it. Now, again, supply and demand zones are very powerful. They can help you get into an amazing trade, especially, when you can get into very good RR using stuff like this. However, you need to partner them with your ideas of structure and things of that nature to make them actually do something. So what we're going to do is we're going to look at everything past this right hand, press this to the right of this little thing I put in to look at every single area that constitutes a valid supply and demand zone to see how you can trade them, or at least how you can anticipate mitigation from them. So again, this does not mean that they're all going to be correct. What they're going to do is function as an explanation to how you can use them to potentially look for mitigation or areas that you can expect something from in the future. So just looking at this, what you'll notice is, let's actually put this here. You'll notice this last down candle right here. And again, that is a valid demand zone, and you put in the actual low as well, right? Taking in the low, taking in the last down candle with the low. Now, that got traded above and validated right here, and then had, as you can see, this validation right here. Okay, so when this came and mitigated it, this became an invalid zone, and we can no longer look at it, for example, as an area or demand zone where we can expect potential mitigation from. Now, there could be mitigation there in the future, and this will be up to preference to look at it or not, but the way supply and demand operates is that once you've had a mitigation, you do not want to be interested in that potential area because they could have closed all the positions they needed to have closed with this move here when they last sold into this before moving price higher, right? And that was when they closed it. Now, they could have moved it higher and then came to close it later, but in this case, they closed it here, so that point is invalid for us, and that one does not exist. Now, the next one is this down candle right here. We take the high to the low using the wicks, and we draw that out. Now, you'll notice that since any of this price action has still not been mitigated. So in the future, this area right here can act as an area where you can look for potential bullish price action or mitigations at, because usually you will see mitigation occur at these areas because what happened is they have to sell here to continue buying. Now that sell to buy, as you can see, barely took out any liquidity, but again, like I said, the market is fractal. So inside of this price action here, there was most likely inside of this candle a ton of liquidity that was indeed created, and this candle right here had grabbed that liquidity and continued higher and has still not been mitigated. So in the future, there may be mitigation at this zone right here, okay? Similarly, you can see this demand zone here. This demand zone was this area here, and then you have to include the low like we spoke about. So we include the low. We notice it only became valid, not on this candle, but when it traded above, so right here. And it has not had any mitigation yet, no mitigation, no mitigation. Boom, mitigated. And as you can see, higher prices were delivered. This area has now become invalidated. We don't want to look for it as a potential re-entry area later down the line. Now again, we get this big down candle, big move up. This on its own is indeed a demand zone. Price became a demand zone here when this candle right here formed and got mitigated with this candle here. Then price came and mitigated more of it, the 50%, and continued higher. That is a perfectly valid demand zone that is now mitigated. So far, in everything we see up till this point, the only valid area of demand that has still not been mitigated is this one right here, as you remember. Now, if we continue moving to the right, you'll notice that, again, we had a demand zone here form. It got mitigated here, and that's invalid now. Now, similarly, we have this last up candle right here before the down move. Now, again, like we said, we include any wick that goes higher than it if there's one to the right of it, okay? We get that. This is your overall supply zone. Now you can potentially expect that in the future, there may be mitigations at this area. That is perfectly valid. Now, as we're doing this, there's something important that you need to recognize. A valid, or an invalidated or mitigated supply zone or demand zone on one time frame can still be a invalidated one or unmitigated one on a higher time frame. So for instance, if we go back here, you'll notice this demand zone right here, this down move, right, through liquidity before the up move away. That down move was validated when this candle formed right here. And after that, you can see the mitigation with this little wick right here that mitigated it and continued higher. So on this time frame, on the 15-minute time frame, this demand zone is invalid. However, if we jump, for instance, to the 1 hour or 2 hour, yep, there we go, to the 2 hour, you then see there is actually this overall demand zone, right, from the high to the low of this time frame that has still not been mitigated. And even though it's just a down candle before an up move, this fully constitutes a demand zone, because what happened is they had to sell to buy here, which means there are orders resting in this area that need to be mitigated now, okay? And we don't know where those orders that need to be mitigated are inside here, but we know that they can come into here and continue, or deeper into it and continue. And again, once you start partnering that with potential candlestick structural shifts to the top side, then you can maybe expect buys from these areas with additional confirmation. So again, you can now start to see how we can now put together the idea of supply and demand zones being formed, and then relaying them and confirming them using candlestick structure or even overall structure like we looked at on the prior videos, especially in the prior section. So we're expecting something like this to occur, right? So that's a perfectly valid one. And I believe price then goes and tests it, right? And that's perfect mitigation, okay? That counts as mitigation. And again, we could have had confirmation for that lower, but that's not what we're looking at right now. Now we're gonna get back to the 15-minute, and you can see this area we had here. This has now become mitigated, so it is no longer considered an area or, an area of supply. It's no longer a supply zone, and we don't wanna be trading this anymore. This POI has been relatively invalidated. So since this point here, the only valid POI currently, or valid demand zone, is this one right here. And the only valid supply zone in this case would be nothing. Actually, we also have this demand zone right here, as you can see. This final down move before the up move constitutes another valid demand zone, because we had a down move before the up move that has not been mitigated after the validation. So there can be orders that are trapped here on behalf of smart money or the composite man that still need to be mitigated in the future before either higher prices are met or price can mitigate and then break down. That's perfectly fine. So we can take a look at what happens and keep following this. But the important part about seeing this is that you need to make yourself understand how these supply and demand zones form and how you can expect potential mitigation on them. So make sure you go through this. And again, whatever time frame you're looking at is the time frame that those supply and demand zones can operate on. So even though, like we said, this area here had already been mitigated and doesn't count as one for us, right? At least under our conditions, the 2 hour or the 1 hour even had a zone here that had been unmitigated still. And as a result, we were able to find potential buys here. And again, we can go and refine this on lower time frames, and that will give you better potential entries. Now, We keep watching this, and as we see price deliver higher prices, you can start to look for potential new supply and demand zones. Now, the last down candle is this one, right? And then we want to do what? Include the lows. So this is your last demand zone. Now, that demand zone became valid when this wick just above it, and then this right here was its mitigation. So again, this demand zone has been tested, and in this case, it's done. This is the only demand zone that we have, and this one, ever since this specific thing that has still not been mitigated, okay? Now we can keep playing price, and as we're playing it, you can see we create a supply zone, we're testing it, right? And you can follow this all the way. Now we've created a demand zone, right? And this has tested that demand zone, right? So again, this is your down candle that gets validated with this move right here, and then comes and tests it before going higher, in this case right here. So this is no longer a valid demand zone, and you only have this demand zone here and this demand zone here. And we can keep playing this out, noticing how this works. And as we create this high here, again, that's your last up move, taking in the whole candle before the down move. And this right here is still an unmitigated supply zone. Now, these areas, these supply and demand zones, will exist on every single time frame. If we go to the daily right now, we will find supply and demand zones that have still not been mitigated, and in the future can act as potential areas of mitigation from which we can expect structural shift, structural candle shifts, and even Wyckoff, which is something we're going to cover in the upcoming sections of the overall private mentorship. Okay, so price comes and mitigates it right there, as you can see. So now we can look for potential price breakdowns if we're especially scalping or something of that nature. But this is now no longer a valid supply or demand zone. The only valid ones are still these ones here. Now, let's keep playing this out, seeing how this works. Again, as it breaks down, we leave behind this last up candle before the down move. This is a perfectly valid supply zone now, and we can expect that there could be mitigation here again. Now, you may continuously ask why we consider those areas if we've described these demand supply zones to be areas that take out potential liquidity. Well, that's because liquidity is fractal. And if we take a look at this right here and we get maybe to the lower time frame, what you'll notice is that we actually did liquidate the positions above these highs, because there are people operating in this market on every single time frame. And because the composite man is also operating on every time frame, getting in and out of the market, there are people getting liquidated absolutely everywhere. So depending on what type of trader you want to be, you can trade just the daily, just the weekly, or get as far down as the minute, the 1 minute, or even the 15-second, as you will see we do in the mentorship. So let's get back to the 15-minute and keep following this. So far, all we have is this valid supply zone, this valid demand zone, and this valid demand zone down here. And those are all valid areas for you to expect certain things to occur at, because there should be mitigation at those areas, because there were orders sent into the market at those areas, so there can be mitigation, right? Price breaks down a little bit, just doing its thing around here, comes and mitigates this. So again, there's opportunities for sells there, but this is no longer a valid area of supply. And instead, now we only have this area of demand and this area of demand, okay? And price breaks down from there to that low, right? As you can see, and creates, the second we get below that, a new area of supply. Okay, and what I mean by that is you can see this is your last up candle, right? You draw that out. Then you can also include the wick because it is higher than it, right? And as you can see, it was only validated when it traded under it, which was right here. So this now has become a valid overall supply zone, okay? Now we can wait for it and it begins to break down, but notice where it's coming to. This demand zone, and notice what it does the second it gets there. It begins to mitigate, right? So this mitigation is occurring now, and what can we expect for potentially price to mitigate off here to come into this supply zone, or to mitigate off here just come way lower, right? Or to come into somewhere in here, or even into a lower supply zone here, which we'll take a look at on a lower time frame in a second. So instead we do get these breakdowns. So this has become an invalid zone. So the only valid zones right now, demand and supply zones on this entire chart from this vertical line we put in, is right here, and that's it. But that's only on the 15-minute. Now, that does not mean that the 1 hour or the 4 hour or even the lower time frames don't have other ones, right? For instance, if we go to a 5-minute chart right now, there we go. We'll notice something of this sort. Here's your last up move before the down move. There is a supply zone, right? This is a supply zone, and it was validated after this candle created, and there has been no mitigation here yet. So price can go and mitigate this and continue way lower, or mitigate this and continue way lower, especially since structure, especially if you're using overall structural points, right, is starting to break down. So you can already be expecting sells for this type of thing to be put into place, right? This is how we're starting to merge the idea of structure and supply and demand zones in the market. And again, as we look at this buy to sell, we can see that it doesn't look a lot like this buy to sell after there's a ton of liquidity created, because it doesn't have to look like that. There doesn't have to be consolidation. If we get lower and we take a look at what that price action actually looks like, you can see that that buy to sell came and took out all the liquidity here. And that means this right here is showing you the emotions of retail traders as they were getting involved in sells before the real sell came in, which liquidated them even on the very, very much lower time frames because of the fractal nature of this market and the way price likes to be delivered. So that's the 5-minute area that we're looking at. And lo and behold, we can be back on the 15-minute, but that has not invalidated this point here. This is a valid supply zone on a lower time frame. And the same way you can get to a 4-hour and you can ask yourself something like this: is there an up candle before a down move that has not been validated yet? And look at this. This overall move here, draw it out with the high included, remember, is a valid supply zone as it has been validated right here, right, with this low, and you can expect for it to come and mitigate it. Now, this mitigation can come and mitigate it at this specific refined supply zone. So this is the idea of refinement. We're going to look at more refinement right after this in the next section. However, you need to notice how all of these are now attuned to the same thing. And of course, if you're looking at structural breaks lower on the 1 hour, you can expect sells from areas like that. And that's a perfectly fine expectation. However, it's still not putting together all the confirmations that are going to be given to you as we begin to do this. So let's get back down to the 15-minute. And again, remember, all of these supply zones are valid supply zones on one time frame or another. They can exist on multiple time frames simultaneously. Okay, so this is this one right here. That's the 5-minute one. There's this one right here, which is this 1 hour one. And there's this overall one right here, which is the 4 hour one. So we can delete that. We can just watch these and see which ones wants to be mitigated and respected. Okay, so price comes way, way lower, as you can see, not tapping into anything, creating new supply and demand zones on its way. And now it starts to put in higher prices. Okay, as it puts in higher, okay, so it just puts in even lower prices. And I mean, we can play this out, but you can see, here's your last up move right here, right? Before the down move. And notice it gets validated, tested, and continues lower. Okay, so this is again an invalid zone because it's been mitigated now. So the only valid zones now exist here, here, and here. And what you'll notice is if we go back to the 4 hour, that move has already validated, or it has already mitigated this 4 hour supply zone. So this 4 hour supply zone is no longer one that you can use, right? Because that's complete as mitigation. However, that does not mean that this 1 hour, or I guess the 15-minute, this 15-minute isn't valid. And it also does not mean that this 5-minute right here isn't valid. So now we can play this chart out a little bit so you can see what goes on, right? We'll play this out a little bit. And as you can see, just based on this, you can see what the mitigation of it looks like. So if we get back down to the 5-minute, notice how we made a move right back up into here to mitigate the supply zone up here, because again, why is it a supply zone? There are tons of sells or buys that they need to exit at these points. And that's what's happening when you see this movement here. And again, as we get lower and lower, maybe even on a 1 minute, potentially, if we get down to the 1 minute, you can begin to see that there's Wyckoff in here and there's Wyckoff that you can trade in there, but that is something that we will cover down the line. But the idea behind this actual subsection is that you understand how to find and how to properly spot valid areas or points of interest that you can use that are found using this idea of supply and demand. So make sure you watch the first video and then partner that with this idea of what constitutes a valid supply and demand zone. Thank you, and I'll see you guys in the next one.